welcome to the Breakfast Club. My name is Darren Hancock, and we are here on Friday, the 23rd of August, 2024. And let's see what the markets have in store for us today. I hope you guys have had a great week. I hope you're all enjoying the videos Michael's putting out there. You're learning lots. There's tons of information on his videos that he's written out there. So there's little nuggets. So you can way through the rants, you get nuggets of gold. But hey, that's the process that he uses, and gotta love it or you gotta hate it. But there's nuggets of information in there, I tell you. So anyway, let's have a little peek at where we are for the day. This is the daily chart. Looking for this to rebalance right now to 19,770. See what kind of reaction we get off of that. So this is the old low. Could take some of these off of here. Look at the 4 hour. That puts us right back into this fair value gap above us here. And we have that little breaker up top on the 4 hour. So we're still inside this big fair value gap here. This SIBI. We're in almost 50% of that range already. Yeah, we're just short of the 50%. Brings us back into this lowest body candle here. Also known as a breaker, by the way. So this breaker here will be the 50% of that range. We'll see what kind of reaction we get out of that. $8.54. So low here coming first. We already had a bit of a reaction over this one. Driving higher. I do like the idea of us getting through this. This was the swing for me. You've taken out all of this. Got relative equal lows here now. You've got your swing here at 4 on the 1 hour. Look when you go above it, right there. We trade above it. Next candle trades back to it, and you go long. That's the 1 hour reversal. 15-minute reversals right here. Body trades above it right there. And you literally open, tap it, and then leave from there. That's the 15-minute reversal. 5-minute reversal. There it is right there. And it's not just hindsight too. If you stick around and you watch the show enough, or you watch Michael enough, he'll point these things out all the time. So there's your 5-minute reversal right there. So watch. Body trades above it right there. You come back inside it to the consequent encroachment of it. It wouldn't be the consequent encroachment because that one is right there. So this would have been one of those classic ones where you don't quite hit the halfway mark. Michael's been talking about that recently on his shows. There's the middle point. Let me just make this a little bigger so you guys can see it. See this? That's the 5-minute reversal. You trade it above it. You come back inside it right there. Or if you wait for this one, displace, come back right shy of that, or this one's right on it. This one's just shy of it, and you continue to go higher. So there's a 5-minute reversal. So you've had a 4-hour, 1 hour, a 15-minute, and a 5-minute reversal so far. The 1-minute reversal. That's the 1 minute right here. So if I take this one here and move it down just a little more, you can see the level of precision that can happen. See how this is just back and forth, and it's not till you see, you'd say, I want to see it break this high on a close that I'm interested in getting in it. So you see it, it's on it here, then it finally breaks it here, trades back into the consequent encroachment of it right there, hangs around there for a little bit, taps it one more time, and then you finally get your lift off. Takes a long time. It's the end of the day, but that's the reversal from 4 hour all the way down to 1 minute. It's fractal, folks. That's if somebody tells you that the candles aren't algorithmic, they have no idea what they're looking at, as Michael would say. Here's another reversal taking out the lows right there. Body trades above it. You come back, tap it right there. And off to the races you go. With these lows are taken here. You have a little fair value gap right here. See for yourself. Just simply look for low to get taken or high to get taken, and look for that first little setup opportunity. You give it one chance. And then if that one fails, wait for it to take this high here. So right there, it trades through it. You don't quite get it here, but it does come back, finally gives it to you here. Takes out that high, relative equal highs. That's what we're going for. Make jagged. Looking for relative equal highs in here. So if you didn't take that one, you wait for this candle right here. You trade above it. You come back inside it. And off to the races you go. It's a simple setup, but it occurs so often, so often. Okay. So that's our upside objective right there. Now let's go through some other stuff. like Bitcoin. This is the one yesterday we were talking about. See how we broke through that here? We were saying we needed to see it break through this and then trade back to it. There you go. Traded back to it. That was the downside objective. You hit it. If you're looking for the lows to get taken, it didn't take the lows. We just looked for that downside objective initially. Pay yourself there. Premium and discount arrays. I talked about that yesterday. And then you wait during this consolidation. So you're looking for, when it consolidates, you're looking for one of those CAM Model 1 and CAM Model 2, CAM Model 3 entries. And this would be a CAM Model 2 entry. We finally pop above that consolidation, trade back into the midpoint of the consolidation. Stop loss will go down below. Stop loss will go down below the lowest low. And if you close below 50% of that range, so if I take this right here, this is just another entry pattern. There's 50%. So you look for that consolidation, or look for the fair value gap that's sitting right there. If you do have one that breaks this high like this, you want to see that little breaker right there get taken to the upside, or sorry, taken to the downside. You want to close below this. So there's your 50% of the consolidation. You're right on it. And off to the races you go. So you back up inside this one. So you go from premium to discount when you retrace inside a range. Then you go from discount to premium. Draw this. Now what you want to look for is, do we extend beyond this? So you've got relative equal highs here. You've run all the way up to pay yourself. So if you've made your entry in here off the CAM model, you're running for this. You pay yourself 1, 2, 3. You pay yourself there. Great. Now, if it here, it would have been one of those. If it trades through it and back to it, you're looking for it to continue to extend higher. It came back inside this range. $75, like 68, it'd probably be like 80% or 89%. Let me have a look at that one, just out of curiosity. Yeah, 79%. Back inside this fair value gap. See how it respects it right there, right on the money. Trades all the way back down to it. We want to see it get through here now, which it did. You're trading back inside it. Now you want to see that extend, run for these equal highs now. So you're looking to see that go higher. There. I'm going to take that one right there just out of curiosity. And we'll put our stop loss down here. Take profit's going to be up there. Well, soybeans really kept coming down. That's great. Now you want to see it. There's a small little fair value gap there. Looking for this weekly objective I think we were talking about yesterday. So soybeans still got some more downside. Yeah, we still have some more. We could get a retracement back up into here. I don't want to see this. We've had a close above it already. And we've closed back below it. So we're still in that. Now we're still in the daily candle. Mean threshold. So that would be the line in the sand if you suddenly decided to go long, which I wouldn't. Wait for that. See how we broke through yesterday's, or this old low when we're talking about wheat? Went lower, it would have hit our objective. It's now come back to this, hit it, and now we've reacted off of it. So we're looking for further downside. Old lows. We've gone through them, come back and found support at them and continue pushing higher. That's sugar. Trying to see where here's a reversal. Pretty choppy. This would be like consolidation and right along the bottom here. Body breaks above it, you come back, tap the top of the consolidation right there. CAM model 1 entry, CAM model 1 entry again if you haven't got it the first time. Now you're running for these equal highs. CAM model to CAM model if that's what you were trading for. Or you trade about the big cluster of liquidity sitting here. And you've got new relative equal highs. So I'd like to see that come back to this candle or these old highs here. Leave the rest of this open and then start pushing higher. Live cattle. Yesterday hit right into our objective. Now I want to see how it reacts off of here because we have down here. So look at this on a bigger scale. Lots of relative equal highs above us. If we lose this candle's mean threshold, which we've already traded back to once, actually it's just a tad bit below it. So if we drop below here on a close, look for a run down into the discount array here. That will be the downside objective next. Keep your eye on this fair value gap here for cattle. That's daily, so you're going to wait for these weeks before we see if they actually pan out the way we want them to. Cocoa still sitting in the middle of the range, so in the middle of that gap. Your kind of reaction you get out of here. We're going to continue back down, taking out these lows. We're going to start working our way through here. Wait and see. Not clean. This is ideal for a short right now if this goes. And it's also a week long, ideal for a short from that point right there. And if it trades through that on a close, then we're going higher. But this is the candle right here. You want to see this low get taken out on the downside, trade back inside that candle. And that fair value gap, stop loss is set up here. You got relative equal highs. So keep your eye on this. Here's the two scenarios. You get this. We want to see where it closes today on the end of the week, whether it closes above that or whether it closes below this. So kind of keep those things in mind. And gold, see how gold came right back inside that level we talked about a few days ago? That was the level we're talking about, a level of sensitivity. It came back right inside it. Perfect. Tell me that's not algorithmic. That's totally algorithmic, guys. I pointed this out, and everything I've pointed out in multiple different types of asset classes. Like Michael says, there's no way you can't tell me that somebody in a boardroom, he doesn't say this, but someone in a boardroom stopped price right there at that precise, inside of fair value at precise level, and then force price, or buyers or sellers decided that was it. There was one more, we just needed one more buyer right there to continue going higher. No, not at all. Not at all. And that's in every asset class. It seriously is. So if you struggle with the idea that there's an algorithm that's driving the markets and it's not buying and selling pressure, I'm it's sad. I'm sad for you because eventually you're going to see this. This is just some surgical class. Here's that gap. We talked about this in July when I was here. Traded below it, come back inside it. If you're short, running from premium to discount inside that very large range. I wanted it to come down into here. It didn't come down there. It gave us a reason right here. It took out a low, ran higher. Did not give you an opportunity to get in or here or here. Just ran for those highs. You have a small reversal here above these highs. Look at that, right on the money. Trades back inside it. Wicks do a little bit of damage. They came back to that imbalance right there. And then we gapped down, finally took the lows out. Look for this big gap right here. We trade above it. We trade back into it. Right there on the money. And you continue running for these highs. Liquidity pulls up here. And now look where you're at. That's $50. That's 10% run in one month. You won't get that from a bank. Sitting in a bank account. Quick reversal. We've got nothing sitting in here. We have this little swing low. Breaker. Look for a return back to old highs. I don't see anything here except for that fair value gap there. If we can return into this breaker to get short, would have been an opportunity, but it's not there. Morning talk and good morning hounds. $26. Let's have a look at what is oil doing. Well, I was calling for $74 in oil yesterday, and we're at $74.26. We managed to make it up to 73.50 or 74.53. That's a fill of the fair value gap on the daily. There's a small little sibby there at 74.51 down to 74.37. Now we'll see if that just starts to run through that. We have sell side liquidity down here. Right now we're reacting right off the daily fair value gap. And we've come back, found some support at this right now. You want to see that go lower? We've taken out that low. And release now. That's the sell side liquidity right there. Took a short right in here. Just close out my trade below here. So now I'm just waiting to see how we react out of here. Looking for more downside, I think. I like a box. Let's put a box right in here. That's my area of interest. Watch this opening range forming now. But keeping in mind, this is the sell side discount array. We'll see if we get a reach for this. I run these out. I want to see this get taken to the upside on a close. Have to get taken out to the upside, and you're looking at more than 50%. I wouldn't take the trade if it's greater than 50% of the range, even if that is the upside. So yeah, we'd have to get close above that, come back into a discount portion of this. If you take this first swing high here, it would have to trade into here first before you start looking for a run higher in that range. So kind of keep an eye on that one there. We'll see how that one acts. Shepard, good morning. I do like the idea of this breaker right here. Trade through it, come back, tap the edge of it right here. Continue down. So far we're finding support off this order block here, but I'm not convinced we're not going to go lower until we get above here. But if this doesn't take, if we don't get down in here at the opening of the 9:30 bell here, so that's, where do my crosshairs go? Waiting for a body to trade above this. You just traded back to the opening fair value gap. Block. Inside. The high is a sensitive area. Open, open. Closed, closed, open. Coming back to that area of sensitivity there. That fair value gap we've got above it here. See how we're digging above here again? Inversion. We traded below it, went lower, came back to it, tapped it here. Now we traded through it. Bodies are respecting it here. Fill of the fair value gap here. Now we're just coming back and repeating that one. I want to see this one here get taken to the upside for further confirmation. And if you miss it, then you aim for this candle here. Or below it again. What's your level of sensitivity of this level? This level, we still have not had a body break above that yet. We're going to sloppy price action now. But when you study it, ask yourself, we've got some relative equal lows here. We have relative equal lows below us. We have fair value gaps below us. We've pulled back into greater than 50% of this little range. And we have our levels that we want to see close above to go higher or close below. So right now we just keep bouncing off of that very sensitive level here and this level here. And if we close above this, I'm looking for the run inside this range. You've already been over 50% of it, so it'd have to get back down into here. It just takes this high, digs back into this fair value gap here. And you've got 42 seconds now. See what this wick does. Right back into the consequent encroachment. Sorry, the mean threshold of that candle. I found some support at this one. If you blow through this one, and that one, look for higher prices. Looking for higher prices. See if we can get back down into this level here. If we can't get back into here, we found support on this. I want to see this candle get taken to the upside, find some support at it, start pushing through to here. See that peel down here now. If you look on the 15-minute chart, look where this came back to. That where it came all the way back inside that 15-minute perfect entry right there. And we're starting to hold down. So if we have this high taken, fair value gap, traded all the way down through the lows, came all the way back up to that perfect entry right there, and then start peeling away. So that's what we're looking at for on a 15-minute chart. I'd like to see that continue coming down now. Keep your eye on that level. See how we're inside this one? We've traded all the way back to the inside of that. If we're marching higher, we got to get through this one here. So it's just a tug of war right now between this one going higher and this one going shorter. See that trade through there. There you go. We'll just wait and see. We've got 6 more minutes. Just took the liquidity here. Let's get through at this level here now. Find support off here. Start pushing higher. We have another one here now. Highs were taken. Keep your eye on this one here. Looking at the only one that's really sitting inside this range. There's little imbalances down here. That's the consequent encroachment. Two more minutes. One more minute. We'll see how it ends up with this 10 o'clock 930 range, a half-hour range here. Not a very clean range. We are finding some support inside these fair value gaps that become inversion, reaching for old highs. Small, quick little snipes on liquidity. The immediate range high is what you want to look for if you're going to take it out. There's your 10 o'clock. Looking for 19,803. Right there. That's a fill of that 1 hour or 15-minute fair value gap at 18.0 or 808. Running higher now, looking for 18,832. Right there. And looking for 854. That swing here, we finally broke through it. We never came back through the other side of it. Come back inside it multiple times. You have the long. It's tearing on an uptrend there. If you would have caught that run here on the way up, off the reversal, you weathered this, you'd be killing it right now. Good morning, Dave. You're not in with Michael this morning? He must be doing a live chat this morning. Okay, we filled in another 15-minute fair value gap up top there at 858. Keep her on this level here. again there. Came all the way back into this here. This breaker. Right to the bottom of it. Inside this fair value gap. Traded below it. Now I want to see if it trades back into this and get support to go lower again. It just popped into it there. Let's see if it actually try going short there. If it trades above that level there on a close, you don't want it. "32 seconds, and then you could be looking to go higher." We'll just see where that closes out. Nope. So look for this to provide support now. You want to see that continue going higher now. Broke it to the downside. When you start wicking through it, come back. As soon as you put your short in there, if it trades above it, stop losses here. If it trades back, gives you one opportunity to get your trade off to go long again. Otherwise, your stop losses in here. I want to see that just take off. See if you get on the wrong side. Oops. That trade's supposed to be off by now. Let me take that off. Well, that's crappy. That's a demo trade, by the way, but they're not let me take that trade off now. Let me just refresh this. Hmm. Looking for the liquidity above the market here. So you're given your long here. I gave you a long here. We talked about it when it was happening. We wanted to see it get above there. It did. Came back inside it several times. Reach for an old high. This one here. Back to a discount array. We did not see how we traded up to it and then through it. That's when I went short. I went short on there. And then I went long once it came back here on my live account. I went long off of here. But I did go short here. And then when it traded back through me, I was like, oh, stop losses here. If it comes back to me, you can get out at break even and go long. Aim for those highs. And I got out just at 19,865. 65 right there, right off the rejection block. Came back, took me here. So now I want to see next level. We're looking for this to go higher now. We're looking for that to reach up into that fair value gap of the 15-minute up here. Now I'm looking for that level here. You're trading back inside this range. It's a little spot right here. You don't get your opportunity to get in there. So look for this one here. If we can trade back into this level before going lower. If not, if we miss it, don't sweat it. We'll wait. Looks like it's going to go shorter. If we can get back up into here, get a premium for a discount, that'd be great. There's a bunch of them around here. We haven't taken a low here. This would be not as strong for me. I would like to see it get on top of it to start getting back into the range. You want to see this continue going lower. Find support in here. You don't want to see it climb above that. See these lows get taken out and return back to this imbalance down here. And then you've got all this liquidity below you here. $760. So that brings us right back to this breaker here. So watch it now. You're between this one and this one. Get up on top of that, look to go higher. Find support on here now. See it get some support off of this. Or leave this open and start pushing higher. Look for these equal highs above you. See how we just look at these inversions to see if we get above them. Then find support at them. Start finding that leverage we talked about. These kind of all these rocks and finding your foothold inside here. Finding a foothold and then start pushing higher. And if you can jump to the next level, get on top of that, find some support at that, leaving this open, even better still. Rejection block. 50% of that wick, the body closed on it. I like to see it come back into here first one more time before leaving. And, you know, keep in mind, this could be consolidation. So, like I've said to you before, pay yourself at rejection blocks. And now you want to see this level here. Find some support on it. Keep going. Got 50% of this wick candles. We're sitting right on that right now. If that holds price. No support. Just continue running for an upside objective. We're looking for 19,932, 19,944. So this one. And study price action now. See if we can't see that run up into that 15-minute fair value gap above the market. level here. Trade below it, trade into it. Wiggle room here. It's fair value gap here. Order block takes out that low. We trade above this again. We're back into that consolidation type move. But all time that provides support, I'm looking lower. You want to see it get through here now. And I want to see that continue driving through here. So we drive through, come back up inside, close below, come back, tap it one more time. See, he's got to get through here though. And then invariably I want to see it get through this candle. If we can close below that candle, then we're looking for lower prices. This guy is where my eye goes, to this imbalance right here. 79% puts us right in the middle of this. As we start to break through them, we want to come back, find support inside them or on them, and go lower. Taking out these lows here. Looking at 50% of that range. Still looking for this downside objective here. Now that we've taken those lows out, we've hit 50% of the range for 10:30, 11 o'clock. That's the retracement time. 40. Oh, we're still at 40 here. So 50% of the range, that's here. You just dipped into the discount. We could start marching right back up again now. I'd like to see this. If that remains open for bullishness, I want to see this start running right back through these fair value gaps now. If not, we want to still see this is a downside objective I don't like to reach for. But if we're going to go bullish, I want to see these start turning into some support. You know, I want to see this low get taken here, though, and create a fair value gap for us. If not, we have to rely on these. Through this, you see. We come back and find some support at that. It's a weaker one, but I do like the opportunity there. Come back into the consequent encroachment of that. See if we can't climb back a little higher inside that range. Eating through it once again, looking for that downside. We traded through it again. So we get into these little consolidation patterns and then further downside. They're finally running these lows now, looking for this objective down here. And the discount array down here. And then do we run for the liquidity below 930? There you go, that's done. Discount array down here. Now the liquidity below the market here. Virgin down. That tells me you want to see these lows, all these lows that just got taken here. Oh, right down to this liquidity here now. We come back, find some support off of here or here. Look for another run on liquidity here. There's a whole ton of it there. See how you find these areas that are high taken, reversal. Another opportunity. All the time. All right, now we've run the liquidity out here at 1050. So I'd like to see this start running all the way back up here now. See how much further we go down for 11 o'clock. If we create a little fair value gap, it's taking out more lows. Then I wait for just a reversal at 11 o'clock. I like 609 to 601. Now it's just a matter of how patient are you waiting for a reversal to happen. Time and price. 11 o'clock. And you want to see this get taken quite significantly. So you can look for this for lunch hour and then either come back into the range again. But that is where you're either gunning for the 11 reversal for the 12, or you create a low and then a lower low. We'll come back into this range 50% or something, gun for it at lunchtime, and then pull back into the range and aim for this after lunch. Let's come back and cleaned up all those people who wanted to go long. But you can see the reversal happen right here above the high. Reverse, came back up inside it for the short. So these 1 minute charts give you the early warning that, hey, if that was our objective and we keep failing to make that objective, look for where it fails. It's like here. Okay, we've traded below it. Then all of a sudden you trade back above it again. You think, okay, so you're going short. Okay, you're going short into this range. You did. Back to an old breaker. And then you traded back through it again right here. Got back on in sync with it to go higher. We have a fair value gap on here. And we're looking for this to get taken on the downside again. It just closed below it, then traded back up above it again. And you go, I'm on the wrong side of it again. You get back in sync. Fair value gap here. Trade back to it. Take the old highs. Look for another reversal. We look for this candle or for this little section right here. Trade through it. Come back up to it. Now we're bearish. You go back to the recording, you'll hear me say, I'm still bearish until we get above this. We get confirmation bearish, come back inside the consequent encroachment of this candle. So we lose this one that was bullish to the downside. You come back up inside it and short. Now I'm looking for this right here. I'm going to keep this right here though. Something tells me we might have another run for that. Little swing point taken. Watch here. Do you find support at this and we start pushing higher? Or does it become an inversion that you support on to run for this low? Macro begins at 1050 right here. Got a fair value gap. Looking to go higher. Finding support off that fair value gap right now. You want to see us get above here, then you look at that fair value gap inside there. Now that we've used this one, oh, you want to see this little piece here stay open now. And I want to see that level there. Do we trade through it or not? So are you finding support at the top of it? We haven't traded through it yet. You want to trade through that? We'll wait for it to get through here. Let's see if it just finds some leverage off the top of it here. We could bang around in here one more time before 11 o'clock. Reach down, take this, and make the move. Yeah, I'd like to see that drop. Drop from here. Take out that low. Yeah. Keep around this level. Same thing we saw up here. We want to see it trade through it, back inside it. Want to see it trade through, back inside, like a bold candle. Then come back and wick into it. It's 11 o'clock now. 11:05. So I'd like to see, I'd still like to see that low get taken one more time, just to throw sellers or buyers, would-be buyers off. They come back and run this engineered liquidity here. See how it's just freezing up in here, just hanging up on that fair value gap. Once it makes its run, bold, and just use this for reverse, or come back, revisit this low. Right now it's still bullish. We're above this fair value gap. We've traded above it and we found support at it, but we're above this one, but we're still inside this one. So we'd have to trade below this one again, and below that, find some support at this to continue going lower. See how these wicks are doing some damage in here. Wait for confirmation. Wait for the algorithm to tell you where it wants to go. Do you use market structure shift entry model? Yeah, shift when it shifts in market. I use just the inversion, Robin. I just use the inversion and I look for a swing below the lows. So breaking market structure to the downside. And then when you want to see that change in direction, you want to see this fair value gap here become an inversion, find support at it, like we saw here. Old highs taken, smooth, equal highs, made jagged. Look for the fair value gap reversal. Come back inside, find support inside this candle. Wick, see how the wick did a little bit of mohawk there? And then we see that consequent encroachment, and then the pull back to here. Reconfirm, fair value gap, consequent encroachment again, and then finally taking the lows out. We're looking for the same kind of idea here. You want to see this, see how the bodies are just, that one's just slightly closed above. So I'm watching here. Right there would be a perfect entry if that was a bold candle, but it's just a tiny little candle, so this is going to run to take these guys out. Still looking for this level down here. I want to see a big bold candle come through this, find support, and then run higher. Aim for this. If not, watch for these. You can get caught in a lot of bear traps here, or bull traps, and then bear traps will be up top. And you got to watch these enough to know what a bear trap is. And it's not a Michaelism, it's just something that we called it. See how we've dropped below it, come back, found support at it now. I want to see this keep coming lower now. Morning, Hadi. So it's the kind of the trap you want to get into. You want to get people that want to buy this low and they want to run it for a high, like a run back into a buy trend. But you got to see that break there with a bold candle, and it didn't do it. It keeps taking people in saying, hey, look, I'm going to go higher, going to go higher. But the algorithm's just holding off on that fair value gap. It does not become inversion. It's just reclaimed multiple times. Then we trade back through it, find support at this level. Now I want to see this come back a little lower. We have come back to that fair value gap here. So you're back into that kind of, see how the bodies sit on there? Wicks did the fill. If we start trading back through this again, you're stuck between this one and this one. One of these has to give way. Either that closes up higher, and we've just run these guys out who are trailing their stop losses up behind here. We come back inside this candle here is a big breaker. Down close candle, takes out these little highs right here. You want to see this left open for this to close below, run below these lows now. Consequent encroachment of this is right here. Watch how that acts off of there. Back to fill it. Welcome to consolidation. Not leaving anything open. It's just coming back and rebalance. Rebalance. Low's been taken. You want to see this one here now? Get taken to the upside. It did. Found support. Now you want to see it take these highs here. See how it reversed? Took these lows. Shows you the reversal. Closes above. Comes back. Taps it. Oh, no. Didn't quite tap it. Sorry. Almost caught it. Now you wait for it to come back into here. I'm waiting on this guy here now, this breaker. And if you don't get it, you don't get it. Just look at this as a study in price action. Got this high here as well. Now, if we clear this one, we don't come back to here. You clear this one, you look for a return into here. This is all going to be a run for lunch. So if you see this here, when it's taking out that low, we watch for this like we do here. If you look for these highs, you look for the first fair value gap on the opposing side. Took out that low, look for this opposing fair value gap. Look for it to trade back into it. It didn't quite give it to us, so you look for the order block above. In this case, you look for this one down here. If you miss this, you look for an opportunity to get in on this candle. As soon as you trade below it, which is right here, closed below, trade back up inside it for short. So you're looking for this candle here. If you can't get in this one, you look for that one or that old high. And this is the next little level right here. So you see if we get a reaction off of here. It's too far into that range for 50%. You want to be in the discount portion, so you want to be below here. So watch here. I'm not interested in chasing price here. Inside, if this creates a little range here, you want the discount back in here or here. If you're sure that you're running for here, or you're pretty confident that you're running back up there, and the 15-minute shows a 796. So not much higher to fill the 15-minute fair value gap. Now you've taken these highs out. Look for here and here. So you've got this one going higher. We didn't get an opportunity to get in on it. Unless you're looking for your fill right there. And you wanted your ideal run from this fair value gap fill back into this range to the breaker. Or this is what I'm looking for now. And if we don't get an opportunity, these are golden ones to reach for. Once we clear old highs, look for a return back into these levels that have not been captured. They'll get recaptured later. There's the fill. And that's the fill it. And it's a return right back to the new day opening gap. Right on the money at 803. Now, do we get the reverse? We're at 62% of the range. optimum trade entry. If you were trailing this one up and you got in here and you're trailing that up to 50%, you move to break even. You're such a love. Thanks, Lovey. Gotta love me cup of tea in the morning. Fair value gap right here. See, take a high, watch here. I'm just kind of keep my eye on this here now. Now we've returned to the daily fair value gap, or the new day opening gap. I'm watching right here. So we're freezing up on it. I want to see that trade through it, not just wick through it. I want to see a body of a candle get through that, come back, find support at this candle or inside that fair value gap there. If it doesn't, it's still going higher. There you go. See it, once see a body get below here though. See if it gives us a level of support here. And continue coming lower. That just tapped it. Good morning, Joe Mack. How are you? There's the return to the high. Keep them in the background. See how the bodies are playing in that? Got a wick doing a little bit of damage. I want to see this body get below here though, not just a wick. Otherwise that's the bear trap. You see that little candle sitting right there? You want to see it trade below that, come back inside it. We're just playing around, see how the bodies are all inside here. just keep your eye on that level. Look at all the levels that keep getting hit inside here. There must be a board meeting going on, holding price, somebody demanding that price continue higher, and an argument ensues inside the fair value gap. They're hitting the button higher, lower, higher, lower. More volume. We need more volume for people. Oh, now we finally got closed above. So now we're going to go higher. See that? You see that they broke above, closed below, closed above, going higher. I didn't want to see this thing keep getting repeatedly hit. Just hit it once and go. You want to see just it come back into a range. Where's that little? See how we trade below it, come back up inside it. You don't see it multiple times get hit. Back up inside that wick. Trading below it again. Bodies traded above, went to here, went to the rejection block, trade right through it and below. Now we're trade through this candle. Now you'd like to see it come back inside this candle to revisit this level down here. See it come back into here, and then you want to see that roll over and come back down again. If it doesn't, look for this to create a fair value gap here. And then trade through it. Now, if we cleared this low, there's a fair value gap right there. You want to see it trade through it, come back and start going higher now, take out these highs. Now you've taken this little liquidity here back into the fair value gap. If we actually trade into here, now go lower. That's the level we were looking to trade back into. Leave that open, keep coming lower. Or trade through it. And that you've got to get through this level as well. I like this one here as support. Or this one here to go lower, this one here to go higher. I just keep lining up these fair value gaps, and I want to see that that candle provides support to go lower, and I want to see this get above here and above that candle, find some support at that to continue pushing higher. So we'll see how this one here right now is providing support. And this is what we were calling before this candle happened. We wanted to see it get below here, so it's closed below that level. Then you want to see it come back inside it or create a fair value gap, which it did. And now the decision is, do we get above this and go higher, or do we find support off of this and drive back deeper into the range? Fair value gap's now filled. Now you just want to find, once you're studying this and you kind of, this is what you want to see next. If the candles start forming that, then it's forming the way you're seeing it, then you're reading price right. We're back to this breaker. We're bouncing off this breaker. Still inside this candle, fair value gap. So two things you want to see, this breaker or fair value gap or order block breaker here, takes that little high out, swing, takes that high, come back inside it, or this guy here, who's gonna give way. You won't be around long, but I'll be watching as long as I can today. No worries, Joe. See how we're failing to start dropping lower? We're getting resistance, and we're slowly starting to climb here. That's the little range. We're between here, and there's nothing below us, so I think we're going to climb up on top of here. Unless Mr. Breaker here at the mean threshold holds. See how they're overlapping? Fair value gap, order block, breaker, mean threshold. All three of them just hit it, bang, 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 off that mean threshold. And we're not getting above that level yet. So you want to get a big push down, get through his. We might revisit these first for lunchtime now. So we're in the middle of that range. There's the consequent encroachment of the whole range, or the equilibrium of that whole range. See how we're kind of just banging around near the middle of it now? And we're coming up to, we're now at 1134. So are we going to take the equal highs? We've made this jagged already, so the likelihood is that we're going to reach for those equal highs. I want to see confirmation here. We got confirmation on the reversal here. Or sorry, on the reversal here. We traded above it. I just want to see if we get back into it one more time before going higher. Lots of wicks trying to push higher, trying to push lower. So far, we're still finding support inside here. It's just reclaiming this fair value gap over and over and over again. Still supporting off this candle here. Come back to that fair value gap we mentioned earlier. See how if you have two of them in a row and you can't get in on one, so this one here, we want to see it break above it. If it doesn't come back and give us an opportunity to get in, and this candle continues to run through the next one, you look for the next one to get in on. And again, we were talking about that it had to be into the discount array below 50% of the range. So there's below 50% right there. We're coming back to the 50% and we're just banging off of this. So ideally, if you did get in here on this consequent encroachment or below that 50%, give you a discount inside the larger range to go higher, you want to see this really start to give way now. You want to see it really start pushing up. I wouldn't want to see it eat through this 50% again if you're looking to go bullish still. Me, I can argue both directions. Right now, it's more bearish until we get through this and that candle right there. I want to see that one get cleaned on the top, come back. I got a full body candle through it, come back, find support at this, and then start going higher. The first indication of that happening is when a body closes above here. Watch. So we talked about these levels earlier. I'm getting back below the 50%. So now we've got this is how we've closed above it. Come back into the consequent encroachment, pushing higher. We want to see a body get above here now. This is very, very choppy. I would not be participating in this. With that much chop, I would not be participating in that at all. So we got our close above. We said we're going higher. There's the close above. Ooh, actually it's right on it. Just came back inside, tap it. Now you want to see these levels support price. Start going higher now. Voila. There you go. Take these highs. See how it gives us this if you traded above this level, you traded back into it, you're going higher. That's where I told you you'd see this level or this level give way on a close above. come back, find support inside it, and you start going higher. That's where you see the algorithm tipping its hat, saying, guess where I'm going? Right there. See how it closed above it? And you go, I'm just giving you a little hint. I'm going north. So it goes up, come back down, take these highs. Come back right up to the bottom of that fair value gap here. Roof, right off of the bottom of it. Big reversal. Now we traded through the bottom half of it. Now we're coming back to take these dudes out here. Because we literally came back and filled in that fair value gap here. Breaker. That takes price out here. Right back inside this support. Now you already see it gone right back up through this. So rebalance all the way back down into that fair value gap here. Right precision. Again, you want to see it close up above here again. The next 6 seconds or so. Close above that level. Right there. Come back, give it a little kiss one more time. And away you go. You don't want to see it trade through that. We're going to run for these lows. Lows are taken. See where that closes now? See how we traded below it? I want to see that come back and tap it and keep coming lower. Now, where are we getting up to? Quarter to 12. I'd like to see that run all this stuff out back here now. Come back to this breaker. We've been waiting for it to come back here for a while. Now it's cleared these equal highs. We got this reversal here as well. Here's the breaker. Come back into this range here. Now that we've taken this low out, we're going to see if this holds price. If this gives way, looking for the equal rows. I do love this level down here still to run this out just before lunchtime and then start running it back up in here and taking these equal highs out. That's what I'd be gunning for. Well, what I am gunning for right now is right here. to the breaker body. Wicks do the damage. We're back into here. I want to see that provide support. Eat right through this breaker again. I want to see that stay open here. And I got 15 more minutes with you, and then I just want to see if this takes his lows out here for lunch. And then I'm looking for it to run back up here after taking these lows. Provide support. Let's put this right in here again. It's got to get through here though. If we get above this level here, find support, then I'm looking for higher. So this one here is the pivot for me to go higher or lower. We're just bouncing inside it. Let me get this guy back here now so we don't have too much confusion over what I'm looking at right there. Now we've taken out these lows. You want to see this level trade through and go higher, and you want to see this candle here get taken as well. Or does this provide support to continue coming down lower? I don't know why I've still got this level here, but I would like to see this low get taken out at 1050. And if it doesn't, that's fine. That's fine. We find support in here. We still have the reversal that occurred. And we're just coming back to fill it. Because remember, we didn't get an opportunity to get in on that. There's where you traded through it. And now you're getting an opportunity to get in on it to go long. Or are we just finding support off this breaker here to go shorter? So when you're stuck in a small range like this, you're gambling if you're saying, well, I'm going long, I'm going short. This is... Hello? Still finding support. I'm going to keep pushing lower. Interesting how this was an optimum trade entry reversal, hey? Look at that range. It traded all the way back up to 70%. Optimum trade entry, reverse. In my phone. Well, I'm glad you liked it, Joe. I'm glad you enjoyed the teaching. It just makes sense, right? When you just look at these fair value gaps as support or resistance and look at the range that they're sitting in. Are they support or resistance? Where's the next one that it's supposed to bounce off of? And I look at these as just rocks, and these are levels of support. So if you're climbing rocks, you look for a level of support that you can get some leverage on, and then you look for where you can get a foothold or a handhold. This is a consolidation break below it, cam model 1 entry for a short, or this is a level that you want to see. Now the lows have been taken, you want to see that for support to go higher. So you kind of just play both sides of the fence and look at price and say, what's the most likely place for it to reach for? And we're looking at lunch hour. Lunch hour usually takes out the morning's low that's created in the morning, which is this guy here. So if we reach for that right now at lunchtime, and then we see another reversal occurring, then you start saying, what relative equal highs am I aiming for after lunch or during lunch? That would be where I would be aiming for. So time, price, looking for levels that provide support, handholds in the rocks. These are all rocks. What rock do you want to step on? Which one's wobbly? I don't know, whatever way you want to kind of look at it. But I have to book this. Sorry, I'm just loading in my appointment here. So Ridgeway North. Well, I got a few more minutes with you, and then I'm going to go spend some time with my family. It's important you kind of look for some downtime as well when you're in the charts. If the charts are not acting the way you want them to act, then move to the sidelines, go have some fun, connect with people. And then Come back to it the next day. This is the last day of the week, so you don't want to be overcommitting anything here. Just wait till next week. Monday, Tuesday. So if we just go sideways here now into lunch hour, this may be just the lows. So keep your eye on this level right here. You want to see, if you're aiming for this, I'm going to take this box off of here. Just keep 600 in mind later on. I just don't want this to be the, no, I'll leave it there. Don't let that be the absolute, it's going to head there, or we're actually going to gun for these lows for lunch hour. If we don't, we need, in order for that to happen, we need confirmation. So we need to see this level give way, find support at it, so we can gun for this level here. Again, keeping in mind this fair value gap down here. We've already filled it. We've taken out that high. We've got a consolidation. We're still finding support off of this level, which is good. We want to see this one give way now. And we're starting the next macro at 1150. So this macro should be a nice little run down below here, or at least clean these lows out. I wouldn't want to see this go clean this out, clean that out, and then get back into a consolidation again for an hour, and then finally run this out. Maybe this takes these out for lunch hour, like 1 o'clock, runs the lows before taking the highs. You're in the middle of this consolidate, or this larger range here, 50%. We're just below the discount range right now. A little tiny gap in here. Let me stretch this out so you can see it right there. See that? Came back up inside it. Right there. You want to see this start really pushing hard now to go lower. Right there. You see that? Came back up inside it. We keep trying to get down here. See this constant poke, get down, run back up, then finally drive through. Gather up some liquidity above it, get some strength. Now we can pair it up with all this engineered liquidity. All these people that are going longs are sitting in here, and all these people are going short up here. You pair them up with these guys here, run down, and now we've got would-be buyers down in the lower half of the market down here. Let's get some gusto here. Thanks, Adi. You have a great weekend too, my friend. All the best to you and your family. Yeah, watch this. I want to see it close below here now. Start gunning for that liquidity below the market here. I just want it to run there first so I can leave on a Friday, drop my mic and say, yeah, baby, I told you. So close below, there you go. Come back up to it. So we still got bearishness, found support. Drop below that level there, came back inside, continue bearish. We still want to keep coming down now. We're going to run that liquidity below that market down. I'd like to see it come back into the consequent encroachment of this, leave the rest, the top half open, and then go lower. Look at that banging right off of there. Okay, that's it for me, but you get the idea. We're still running for this liquidity below the market. Look for these levels of support. And anyway, I hope you enjoyed that on a Friday. Ding, ding. Messages. Okay, so I hope you enjoyed your the session this morning. And thank you for those of you who stuck around. I gathered a few more of you a little late in the day, but anyway, look for that continuation down here on this liquidity below the market here. See how we find nice little support off of here? I tell you, you guys, we'll see this every freaking day. It's when the algorithm gives you that little hint that, hey, look, I need to see this to go higher. I need to see this to go lower. And you see it. You see it playing out in the markets. So I kind of hope you've enjoyed yourselves today. You get to see a little bit about studying price actions, a lot more fun than you think. So hopefully this will help you improve your level of your entries, your exits, whatever trading strategy you use. That's the whole purpose of my channel here, is just to kind of read price action with you regularly. And you'll see I'll do my own trades. So you'll see them popping up here every once in a while. I do my trades on the side here. I don't share my trades because I just want you to study price action. We're just going to watch it and see if it acts the way we want it to. And then if it supports your trade setup, then I'm 100% for that. And I hope it helps you improve watching your trades, watching the algorithm, and then waiting for specific things to occur. And if they don't occur, then you wait for what you want to set up. And then once you get that set up and it aligns with your particular model, your trade model, then you can feel a little more confident about your executions now, because you're looking for these levels to provide support. Now, you're going to see this many, many times, and you say, I want to see this one specific thing. And if it starts to manifest, and you can start calling candles in advance, what you'd like to see, where it would like to fail, or where it should fail for you. It's that failure point where people, if you start to recognize where things fail, then you can decide, hey, look, my stop loss doesn't need to be there. If it fails at this point, I'm wrong. I'm on the wrong side of the market. Like we talked about, when you trade through something and then you come back to it. So like, for example, here, we traded through it. We wanted to come back, find support at it, but it traded through it. Well, then we want to go higher, take these highs out. Then as soon as it trades back into it, I'm on the wrong side of it. So now I'm on the right side of it. If it trades back through it on the downside, I'm on the wrong side of the up. Now we're looking for these old lows, these swing points. There's something down here that there's a drawn liquidity for. You start looking at all those things that Michael's taught you over the years, and you're just watching price action prove to you that, hey, look, I'm finding support at certain levels. I want to see this continue pushing through and start running for the liquidity here, and then eventually running for the low created before lunch, or the low of the day. If it takes that, you're happy, you got your run. So there's the low there. And then just watch for this here. And if it takes it, high five. Imagine I'm giving you a high five here, and you made a bit more cash for the day. And then wait for that reversal to happen. One of these things to happen down in here that would draw price to your reversal. As soon as you get in on that, take your model, whatever your model is. If that's your model, if you're a turtle super, look for a run below here, and then catch a turtle soup on the way back. for lunch hour. Anyway, that's it for me. Thank you very much for tuning in. And 17 of you, I'll take 17 people that want to learn than just sitting here by myself. So it's nice to have somebody to chat with. I wish you guys awesome. All the best. Have a happy weekend, and I'll see you on Monday.